Taking the long position in trading is actually buying the stock and expecting the price to go up in upcoming time, which results in profit based on its appreciation. It is also known as going long. Now, let's understand with an example. You bought a stock for $10 and in future it appreciates to $20, resulting in your profit of $10. Now let's level up your trading game. Look at this chart. You will feel a long trade setup opportunity because you are exactly at the key level where price had multiple touches. Also, you are trading with an uptrend, which are forming higher lows as well as higher highs. Further, you would also be noticing a trend line making an area of confluence. Further, you also witness a change in candle's color, which shows a reaction to key areas of confluence. Interestingly, this recent point of reversal confirms that this level is valid and respected during a recent time periods. After knowing all of these confirmations, you are now damn confident that this is the opportunity for long trade and believe that price will surely continue its upward momentum. Now you will buy this stock by entering into a long trade. Now let's assume that you have got $1,000 to invest in this stock and the candle closing here, which was your point of entry, is at $20 per share. Now, to find out how many shares you can own from $1,000. So take your $1,000 and divide it with $20 per share, which gives you an answer of 50. So it means you can buy 50 shares of this stock exactly at this trade setup. Now you notice that recent swing high reversal is exactly here, which makes a resistance level and a supply zone. You also witness formation of long wick candle showing a rejection at this zone. Now you finally decide that this key area would be a perfect exit for your long trade position and go buy your Ferrari with this trade win. Jokes apart, this candle actually closes roughly at $29.60 per share, as you purchased 50 shares of this stock. So take 50 and multiple this with $29.60 per share, which results in $1,480. Now to find out what exactly is your profit, you will take $1,480 and subtract your initial investment of $1,000, which caused you to enter in a long positive, resulting in a profit of $480. Now, let's understand the other aspect of this scenario. Taking the short position in trading is actually selling the stock and expecting the price to go down in upcoming time, which results in profit based on its depreciation. It is also known as going short. Now let us understand with an example. You wanted to short 5 shares of XYZ stock being traded at $2 per share. Now this means you are borrowing 5 shares from broker and then you sell at open market for $10. You now owe 5 shares from your broker. However, after some days, stock price of XYZ share drops from $2 per share to $1 per share. Now you buy back of XYZ stock from market for $1 and give it back to your broker. Now, as a result, you made $5 from this short trade ad you sold previously, 5 shares for $10, which costed you only $5 to buy it back and settle your debt to your broker. Now, let's level up your trading game. Look closely at this chart. You will notice a swing high at recent reversal point, which indicates that there is a definite supply and resistance zone. Moreover, there is also a wide divergence inside a zone forecasting a possible reversal. Also, there is a rising wedge pattern, and once it breaks this pattern, you will believe that now price will go downwards. After then, you decide that you will be definitely going for a short position. Now, let's assume you have $500 to invest in this stock. The candle exactly here, which was your short entry point, is roughly at $15.60 per share. To find out how much exactly shares you can short, take those $500 and divide it by $15.60 per share, which will give you an answer of almost 32 shares. Now, you will borrow $500 to borrow those $32 from your broker and sell it for $15.60 in open market. Afterwards, price suddenly starts to go downwards And you know recent swing low reversal is here, which indicates a support level and demand zone. Now you decide that this would be ideal spot to finalize your short position. This candle close here is roughly at $10.60. Now you owe 32 shares of this XYZ stock to your broker, and buying back those 32 shares at $10.60 will cost you almost $340. Now subtract your buying back of shares of $340 from $500, and hence covering your short position will result a net profit of $160. Now to continue learning about trading, make sure you liked and subscribed this channel so that our team will produce more premium content free of cost for you on YouTube.